Hello and assalamu alaikum everyone. This is Kashif Kamran and I welcome you all to a very important session where we all will be understanding the new technical article by the AAA examining team, Risk and Understanding the Entity, which is applicable for exams starting September 21 and onwards. Now, this is not an article which is a current issue. This is not an article published under the syllabus area G. This is an article which is published under the syllabus area D, which is about risk and understanding the entity. Now, how will this article impact your AAA paper starting from September 21? Now, let's go through this article and let's try to understand what are the key fundamentals of this article, which a student should be knowing very well when preparing for exams starting from September 21 and onwards. Now, this technical article was published just recently ahead of the September 21 exams. And I just want to share that article with you on your screen. I hope you can all see this article now, Risk and Understanding the Entity. This is the article published by the AAA examining team. Now, this article has been written for both the AA students and the AAA students. So not everything in this article is relevant for the AAA students. So I just need to assure that you are reading the selected areas of this article, which is relevant for a AAA student. Now, this is an important area for both the AA students and the AAA students. When you scroll down this article, this is basically in context of the revision of the ISA 315. And the ISA 315, identifying and assessing the risk of material misstatement, is a core syllabus for the AA students and for the AAA student. And the revision which has come in the ISA 315 has been the basic subject matter why this article has been written and what is the likely impact of those revision on your AAA paper starting from September 21. Now, when you go down this article, examiner will present you a table for the AA syllabus, so that's of no use to you. And then you come down and the examiner presents you a table for the AAA syllabus. Syllabus area D, that's where the change has come in. We know syllabus area D is the syllabus area which deals with planning and audit of financial statement in the AAA paper, and that's where this article will have an impact. So that means this article will have an impact on the first question of the AAA paper, because the question number 1 is a fundamental question which is set at the stage of planning. Now, because the question number 1 is set at the stage of planning, this article will have an impact on the question number 1. Now, it's not necessarily that right from the very first exam sitting September 21, the examiner brings the changes from this article into your exam setting. It is quite possible that the examiner delay it to the December exams. And it is equally possible that the examiner brings the changes right from the September 21 exams. So you cannot be very casual with this article. You need to read this article very well, because we know whenever a new article comes in, examiner can even test a definition from the article. Examiner can even give you some knowledge marks from the article. So it's very, very important that you read through this entire article. Now, when you scroll down this article will initially be telling you about objective of the audit and the assessment of risk. Now, this is something which every AAA student must be knowing. When you read through it, you will realize, oh, this is what I know, because this article will be talking about the overall objective of audit and the purpose of assessing the risk, and you read through it as quickly as possible. Then you go down, it explains you the formula of audit risk, with which you all are very familiar. You know what is an audit risk, you know the components of audit risk, and then it explains down under the components of the audit risk. It gives you the definitions of each component. And then the article scrolls down into inherent risk, explaining in detail what an inherent risk is and how the auditor identifies an inherent risk and what sort of and some sort of examples of inherent risk where the auditor needs to be very focused on. Now, examiner is explaining in detail the inherent risk, and the change which has been brought in is in inherent risk. Now, I will be giving you a very focused presentation today, which is just around the critical change, which I believe is the most important for a AAA student, and where the AAA student should be very sound at, because we know the question number one is a case study. You are a manager in the question number one case study, and in that context, from this article, something is very important. You can read through the other parts of the article yourself. You go through inherent risk, then you go down understanding different elements of control risk here. And after the control risk, examiner tells you something about the detection risk. Now, there are lots of elements in control risk where the examiner speaks of different types of controls, the direct controls and the indirect controls, which is more applicable to a AA student, because you know in a AA paper, you get a question which is around control weaknesses, or you get a question where you need to recommend improvements to control. Now, we know in AAA paper, you're more focused in picking up the risk or in evaluating the risk. And we've never seen questions coming on control weaknesses or recommendations. Yes, I think in just few of the recent exam sittings, there was a question on picking up the weaknesses and providing recommendations, but that was more in the context of a forensic audit, because forensic audit is done to investigate what are the loopholes in the system which resulted into a fraud. So I would not relate that question on control weaknesses and recommendations to the context we are discussing today. But in a AAA paper, we're more focused on assessing risk. In the AA paper, yes, the examiner do ask you about control weaknesses and the deficiencies and the recommendations. So the area of control in this article will be of more interest to a AA student. For a AAA student, what I believe is important is the area of inherent risk for you. So you need to spend a lot of time on inherent risk, where the examiner has even spent a substantial time discussing the changes which has been brought into the inherent risk and these areas around inherent risk. So in my presentation today on this new article, from the AAA perspective, I will be focusing on the inherent side, because that what I believe is very, very important. And I will just make you realize why that is important. Now, the very first thing which is important in the article and which has been revised due to the revision in ISA 315 is a terminology known as spectrum of inherent risk. What is a spectrum of inherent risk? You all know what is an inherent risk, right? You are all AAA students. I'm not going down revisiting the definition of an inherent risk, because that is still the same. Inherent risk, you know, is a susceptibility of an account balance, or a susceptibility of a disclosure, or a susceptibility of an assertion to a material misstatement, assuming there are no controls in the organization. Now, we're not concerned with the definition here. We are concerned with what is the spectrum of inherent risk. So the new addition here is basically what is the spectrum. So you need to understand what is the literal meaning of the word spectrum here, and how this spectrum will affect you in the question number one of the AAA paper. So let's open this discussion. Now, ISA 315 revised 2019 has introduced a terminology known as a spectrum of risk. The inherent risk spectrum involves a more granular consideration of risk, which plot the potential magnitude of a risk on the one axis and the likelihood of that risk on the other axis. So it's more like plotting the risk on the axis. On one axis, you're looking at the magnitude, which is the impact of the inherent risk on the financial statement. And on the other way around, you're looking at the likelihood of that inherent risk to occur. So one side, you're looking at the likelihood, one side, you're looking at the impact, and you're making a spectrum. So on a spectrum, you have low and high. You have low and high. You're not making a spectrum in the AAA paper. Don't be worried about it. But you need to understand what exactly is a spectrum. You are not drawing spectrum. You're not illustrating spectrum in the AAA paper. How will this spectrum affect you? I will be coming to it shortly. But this is the literal meaning of the word spectrum, that you have two x's, x and y. On one side, you have the impact, for example, and on the one side, you have the likelihood. And you look at the low likelihood and the high likelihood, you look at the low impact and the high impact, and you try to find on this spectrum the more important inherent risk. Now, some of the inherent risk will have a high impact, which means they're very, very important. Some of the inherent risk will have low likelihood, but they have a high impact. So some will have a low likelihood, but will have a high impact. So they're very, very important because the impact on the financial statement is very significant. But some of the inherent risk will have a high likelihood, and even they will have a high impact. So they are more important when you look at the spectrum. Now, we know spectrum means you have a variation of inherent risk. Some inherent risk will be less important. Some inherent risk will be more important. Now, whenever the auditor investigate inherent risk at the stage of planning, and the auditor gives careful consideration to the knowledge of business provided to the auditor. And in your case, in exam, you have a case study, and in the case study, you are identifying the inherent risk. Now, when you identify as an auditor several inherent risks like 10, 15, 20, for example, I'm taking more practical approach here, not just the exam paper. Suppose you identified 20 inherent risks within the financial statements of a company of which you are the auditor and you're planning it. Now, those 20 inherent risks, when you put them on a spectrum, some of them will be less important and some of them will be more important. So what is the spectrum helping you with? The spectrum is helping you with identifying the more important inherent risk. Out of the 20 inherent risks, all of them will not be equally important. They will all have different levels of importance. Some have low, some have moderate, some have high. Now, the spectrum and the concept of spectrum is helping the auditor in identifying more important or more significant or more attentive inherent risk, where the auditor will pay a particular attention when the auditor is going to the audit. So out of the basket of 20 inherent risks you got, now you need to find out of the 20 which are more important, where I would spend time on when I go to the audit. So being a manager, I should know the more important inherent risk, or being an audit partner, I should know the more important inherent risk out of the 20. Some of them might be very routine inherent risk. Some of them might be very low-sided inherent risk. But on the spectrum, or the spectrum will help me identify the more important audit risk or inherent risk, sorry. So spectrum of inherent risk. So you need to understand this word spectrum. So spectrum is when you plot the risk on a continuum, low and high, and you find which of them are high, which of them are low in terms of the likelihood and impact. So when you look at a spectrum have two sides, impact and the likelihood. And on that basis, you identify which is more important. If some of you have undertaken or is undertaking the paper of SBL, in the SBL paper, you are very profound of a model known as a heat map. The heat map or the risk heat map is almost the same thing. The risk heat map tells the business which of the risk facing a business is more important. So the business identifies several risks and then they plot them on a heat map to identify which is the more significant one. The same exercise is being done by the auditor, and the auditor is identifying just the inherent risk, and he's plotting the inherent risk on a spectrum to identify which of them is more important. Now let's move on and see how would the auditor judge which of the inherent risk is a more important one. So the first thing we just covered in, and I just want to put that on my support file here, risk in understanding the entity. What's so special for a AAA student? What the AAA student should focus on. So I believe the very first thing you should focus on as a AAA student from this article is to know what is basically the spectrum of inherent risk. So you should be literally clear with the terminology. If the examiner asks you, explain the term spectrum of inherent risk, you are able to explain it. And you should know the application of that as well, on which I am coming shortly. So spectrum of inherent risk is the first major change and is the new terminology which has been brought in by the ISA 315 revised 2019. So spectrum of inherent risk. Now, when you know the spectrum and you know how the spectrum works in terms of the likelihood and impact and identifying the more important risk, plotting the more important risk on the spectrum. So spectrum is moving on the two sides, right? One on the side of the likelihood and one on the side of impact. So you have two sides of the spectrum. So one axis of the spectrum will look at the likelihood and the other one axis of the spectrum will look at the impact, and you find which is a more important inherent risk. Now, how would you judge, or what factors will you take into account to judge what is a more important inherent risk? So what factors will you consider? What factors will you consider, or what factor will you consider to conclude on more important inherent risk? Now, ISA 315 revised 2019 tells us about the factors which you will consider in considering which are more important inherent risk, which are higher in the spectrum of inherent risk. So let's find the answer for that. The intention of the spectrum, right, is to identify which are more important audit risks. So this is the intention of making the spectrum, is to drive more focused responses to different risks. Now, when you think as an auditor, what should be my response? How much time should I be giving in the audit? It will be divided because the risks are of different types here. Some are less important, some are more important. So you cannot give equal time. You cannot put your equal efforts on every inherent risk. Some will have less effort, some will have more efforts. On some, you will perform more procedures. On some, you will perform less procedure. So the intention is to drive more focused responses to different risks. So you get a more focused response to the one which are more important. So that will really help you with devising your audit strategy. And when in the audit strategy, you determine how much time you should be spending, or when you determine the resources to be allocated, or when you determine in your audit plan the procedures to be performed to mitigate the risk, they will have a very focused approach towards the more important risk in the spectrum. How you judge where an inherent risk sits on the spectrum? Which is the more important inherent risk? Which of the inherent risks will sit high on the spectrum? High on the spectrum means the one which is more important, like high likelihood and a high impact, or low likelihood and a high impact. So how you judge, what will you think in the exam? How would you conclude in the exam where an inherent risk sits on the spectrum, and you're looking at the one which sits on the high side, which sits on the high end of the spectrum. You're not looking at the one which sits on the low end of the spectrum. You're looking at the one which sits on the high end of the spectrum, because that's very important for the audit. So how would you judge where an inherent risk sits on the spectrum? The higher ones, right? So let's find the answer for that. And this is what ISA 315 revised is telling us how you judge. So let's see what are the considerations, or what are the factors given to us by ISA 315 revised. The inherent risk factors as per the ISA 315, which will enable you to judge where an inherent risk sits on the spectrum. Inherent risk factors help determine where a risk sits on inherent risk spectrum. So these factors will help you determine where an inherent risk sits on the spectrum. Let's see what are those factors. And you know all these factors from your prior study of AAA. There are no unusual factors here. These are simply a revision of factors because the list is given in the ISA 315 revised and might help you down with your exam paper. The factors: complexity, subjectivity, change, uncertainty, management bias, fraud risk factor, other events or conditions such as entities' past history of misstatements and entities' past history of control deficiencies. That means the entity is not very good because they have been into misstatements in the past and they had very bad controls in the prior years. Lack of personnel with appropriate financial reporting skills, or the entity financial team is not very expert. They have lack of expertise in their financial department. They have lack of expertise among their directors and managers who are attached with preparing and presenting the financial statement. So if there is a lack of personnel with appropriate financial reporting skill in a case study, or the case study is telling you that the finance director or the finance manager who is associated with preparing and presenting the financial statement is not very up to date on the financial reporting, or is not very experienced with financial reporting, something like that, that will also increase the inherent risk on the spectrum of risk. It will increase the magnitude of the risk on the higher side. Now look at them one by one. Complexity. You know, as students of ACCA, there are certain areas within the financial reporting standards or the accounting of certain areas within the financial reporting standard is very complex. Like actuarial valuation is a very complex accounting as compared to recognizing a depreciation expense. So there are certain accounting standards which are very complex, like IFRS 7, IFRS 9. There are certain accounting standards that are very complex, like revenue recognition, finding the right time to recognize the revenue. There are certain accounting standards which are very complex, like a share-based payment. There are certain complex accounting standards. Now, there are certain standards where recognition of something or disclosure of something is very easy for the management. But there might be certain accounting standards which are very complex for the management to recognize something and disclose something, and they might do mistakes. So if an accounting standard is complex, if the accounting treatment is complex, that increases the inherent risk that there is a susceptibility that the accounting treatment may go wrong. Even when you look at this complexity with the last point, lack of personnel with appropriate financial reporting skill, now that becomes a more escalated problem. Now, if there is a complex accounting standard, but you have a very good management, you have a very good financial team who is very capable, very experienced, then the inherent risk goes down. But if there is a complex accounting standard with a weak management team, that inherent risk scales up on the spectrum of inherent risk. So you need to look at the complex accounting treatments like impairments, like determination of the recoverable amounts, when to recognize an impairment. Such things become complex. Complexity also increases with the size of the organization you're auditing. Because if you're auditing a large insurance company, and the complexity of the accounting standards or the complexity of the accounting treatments with a large insurance company is far more difficult than auditing a large manufacturing company. So if you're auditing a financial institution or an insurance company, the complexity or the scale of complexity automatically increases, and that increases the inherent risk, and that increases the inherent risk on the upper spectrum of the inherent risk. So complexity can be by the nature of the company, and complexity can be because of the certain natures of financial reporting standards which are more complex than the others. So complexity of the accounting standards and complexity of the entity. together can increase where the inherent risk sits on the spectrum of it. Subjectivity. We know there are so many areas in the financial statement which requires subjectivity, which requires management decision making, which requires subjectivity like estimates, like provisions. So any area of the financial statement which involves subjectivity, like determining the fair values, determining the recoverable amounts, determining the value in use, determining the provisions, estimates. So wherever there is an element of subjectivity involved, that will increase the inherent risk on the spectrum of inherent risk. That will increase the importance of inherent risk on the spectrum of inherent risk. And we know in the past papers, so many times we see examiner giving us situations where subjectivity is involved, like fair values, like impairments, recoverable amounts, estimates, something like that. Examiner is very fond of giving you estimates and subjectivities within the case studies. Change. If there is any change for the first time, like there is a change of a law and regulation impacting the financial statement for the first time. So if something is happening for the first time, there is a change which will affect the financial statement for the first time. There is a change of a law which will affect the financial statement for the first time. Now, we know when something is done for the first time, there are more chances of a misstatement. There are more chances that it might go wrong. So change. If there is a change of law, if there is a change of a recent regulation, if there is a change of an accounting standard, management is changing the accounting policy. So if there is any change of an accounting policy, change of a law, change of any recent legislation, change of an accounting standard, that change needs to be considered as important, right? So change is important. Uncertainty. Uncertainty means litigations. Uncertainty means outcome of a legal case. Uncertainty, contingent liability or a provision. Uncertainty, possible outflow or a probable outflow. Uncertainty. So there are lots of areas in the financial statement where there is a lot of uncertainty. Uncertainty regarding going concern, uncertainty regarding material, uncertainty regarding your foreseeable future. So uncertainty increases when we speak of future. Uncertainty also increases with the outcome of a legal case. And uncertainty is very closely connected with the element of subjectivity. So lots of symptoms of subjectivity can fall under uncertainty. But uncertainty is with the legal cases, the outcome of the legal cases, right? So you need to be sure of that. And we have seen so many times in the past paper, examiner giving you legal cases and their outcomes and how to deal with them in the financial statement. So that's an element of uncertainty affecting the financial statement, and even uncertainty relating with the foreseeable future, the material uncertainties relating to the foreseeable future, so on and so forth. Management bias. So many times in the past paper, we have seen the risk of management bias. So if there is a situation where the management bias is higher, like the directors are rewarded on the basis of the company's performance, now that increases the risk of management bias. Or if it is a newly listed company, not listed company, newly listed company. If it is a newly listed company, in the management, there is a risk of a management bias that they might manipulate to show a better performance. So if it is a newly listed company, that new is creating the risk of a bias. Newly listed company, right? I'm not saying listed company, I'm saying newly listed company. Or the management bonuses are linked with performance, that creates a management bias. So there could be certain situations in exam paper where the risk of the management bias increases in manipulating performance or manipulating results. Automatically, such an inherent risk will sit in the upper spectrum of inherent risk. Fraud risk factor. If there are fraud risk factors present, like you have weak controls in place, or there is a possibility that there is one person leading the organization and that one person is very powerful, and you believe this one person is in a better position to override controls, any fraud risk factors given in ISA 240, like you have chances of collusions, you have an incentive, you have an opportunity, like you have weak controls, you have an incentive to do fraud, you believe the characteristics given in the case study about a person or about a situation is encouraging fraud. So if any factor encourages fraud, automatically that increases the inherent risk spectrum. So fraud risk factors, if present in the case study. Other conditions like entity's past history of misstatements, the entity has not been good in the past history, they have been doing lots of misstatements, the control of the entity in the past have not been very good, something like that given in the case study, or lack of personnel with appropriate financial reporting skills. So these are just situations, examples, and most of them have been a regular feature of your examiner past papers, the AAA past paper. How many times we've seen situations where a person lacks a financial reporting skill? How many times we've seen a change of a director, a new director coming in, and the new director is not very capable? I think that was in December 15, question number 1, where the director was not very competent enough and he was taking very wrong accounting decisions. Question 1 of the December 15 exams. So many times we have seen uncertainties, legal cases, change of accounting policies, accounting estimates, complex accounting standards, management bias have come so many times in the case studies. So such factors help determine the auditor, help determine. The auditor needs to exercise the judgment because these factors are just helping you, but then you have to judge as an auditor, where will the risk sit? Will the risk sit on the low side or on the high side of the spectrum? You need to take a decision on the basis of the factor in front of your screen. So be very watchful in exam paper of situations like the one given in front of your screen. You can look at complexity, subjectivity, change, management bias, uncertainty, fraud risk factor, prior history of misstatements, and lack of personnel with appropriate financial reporting skills. Now, these are factors helping you with picking up where the risk sits on the inherent risk spectrum. Now, how would you be judging in the exam? See, one thing is examiner might ask you the definition of spectrum. One thing is examiner might ask you the factors which helps you determine where a risk sits on the higher end of the spectrum, because these are not all knowledge areas in the article, and the examiner can directly ask you a 5 marks, 10 marks question, just asking you the factors or the definition of a spectrum. What is the meaning of the spectrum? Might be, and it could be possible that examiner might ask you to involve the spectrum in the case study. Again, involving spectrum does not mean you're making the axis, you're drawing the axis. No, spectrum means that you need to realize which of the risks are more important, which of the risk has the properties given in front here, which of the risk has these properties, making them more important ones. So you should know the factors which determine where the risk sits on the spectrum. So after this, we have one final discussion, and a very important discussion, which will really change the way you look at a risk question in the AAA paper. So what factors will you consider to conclude on the more important inherent risk? So those factors are given in the ISA 315. I've just covered with you those factors. You should know those factors as given in my presentation, as given in the presentation. I'm not just putting them down over here. The last thing, what is a significant risk? Now, this is the third area introduced by ISA 315. Knowing the spectrum, knowing how the spectrum works and what is the benefit of a spectrum, knowing how you pick up the risk on the spectrum in terms of different factors and how different factors help you realize which are more important risk on the spectrum. Finally, you conclude down with what is a significant risk. That's more important. That's more easy rather. The one which is on the high end of the spectrum is a significant risk. Examiner can use the terminology significant risk in your exam paper. I'll just tell you how after completing my presentation. What is a significant inherent risk? Now it's very easy. You know that a significant inherent risk will depend upon the spectrum, and we've already covered that. So any inherent risk which is high in likelihood or high in magnitude and which is high on the spectrum will automatically become a significant inherent risk. Now, how will this terminology impact your September 21 paper or onwards, and how this terminology should be utilized by a student in the exam paper? I will be giving you a good example of that, but let's first complete the presentation. What is a significant inherent risk? As per the ISA 315 revised, a significant risk is the one close to the upper end of the spectrum, close to the upper end of the spectrum. So if you're making a spectrum, low, high, in terms of the impact or in terms of the likelihood, so the one which is on the upper end of the spectrum, that means this, the one which are more high in likelihood, the one which are more high in impact. So the one of the risk which comes in that area of the spectrum will be the one which are considered as significant risk. These are the one which are known as significant risk. The one which are close to the upper spectrum. So the one which are close to the upper spectrum will be considered as a significant inherent risk, or one that has to be treated as a significant risk under other ISAs. The one which has to be treated as a significant risk under the other ISAs, either a significant risk is the one which sits close to the upper end of the spectrum on the basis of the factors you got from the preceding slide, right? Or examiner is telling us in the revised ISA 315, or the one that has to be treated as a significant risk under the other ISAs. So one which is close to the upper end of the spectrum, you know that from the preceding factors we just covered, or the one which has to be treated as a significant risk under the other ISAs. Let me share the knowledge with you. The examiner is saying there are two types of significant risk. Number one, there is a significant risk which sits close to the upper end of the spectrum. And you know, how would you identify that risk which sits close to the upper end of the spectrum? On the basis of the factors discussed above. Number two, the risk particularly identified by other ISAs will be important ones and will be significant ones. Now, there are lots of ISAs which tells us about the risk which are important, or the significant risk, the other risk particularly identified by ISAs. Now, the ones identified by the ISAs includes, if you look at the ISA 540, which is estimates, auditing estimates, tells us about that estimates is a very high risk area. When you deal with ISA 240, which is the fraud, it tells us that the areas of the financial statement which involves greater degree of uncertainty, areas of financial statement which involves greater degrees of subjectivity, area of financial statement where there is a risk of management bias is considered as high areas where inherent risk could be high. ISA 240, right? Fraud risk factor. Now see, the list we discussed above was, it seems like it was derived from the ISAs itself. The fraud risk factors, including the ISA 240 says that the revenue recognition is an area which is at a higher risk of manipulation. Revenue recognition. So ISA 240 particularly identifies revenue recognition, the timing of revenue recognition, the cutoff of revenue recognition as a more important inherent risk, beside the other inherent risk where the fraud risk factors could be present. The fraud risk factor could be present, but the particular one identified by the ISA 240 is the revenue recognition. Even estimates, even areas of financial statement which involves subjectivity. So the ISA 540 auditing estimates identifies for us the estimates as a greater risk, and then the revenue recognition is identified by ISA 240 as the one which has a more high degree of risk. So there are other ISAs which particularly identifies the risk for you and wants the auditor to pay particular attention to these areas. Even the ISA 570, which deals with going concern, highlights going concern as an important area, going concern as a risky area, because the management could conceal possible implications in future. Even the related party transaction, IS 24 speaks of the risk, ISA 550, related party transaction speaks of related party transactions, how the auditor performs audit of the related party transactions, the ISA 250. Again, there is a risk of disclosure that the related party transactions are not disclosed. So these are particular risks. ISA 570 speaks of the risk in going concern. The management can conceal material uncertainties from you, or the management would not like the financial statements. Management would not like to give disclosures of the material uncertainty, conceal material uncertainty disclosures relating to going concern. So management can conceal that. So these are particular areas where management could manipulate financial statements, could conceal things from the auditor. Right. So these are important areas, other significant risk areas identified by the ISAs. So look at the definition now. A significant risk is the one close to the upper end of the spectrum, or the one which has been treated as a significant risk under the other ISAs. So some specific ISAs do tells us about important risks. So we need to treat them as very, very important. In your past papers, how many times revenue recognition has come in? Almost every time. How many times in the past paper we have seen situations involving estimates? Because these are important risky areas where examiner pays particular attention when examiner is devising a case study. Determining which risks are at the upper end of the spectrum depends upon the nature and the circumstances of the entity, and of course the auditor judge. How would you determine that the risk is at the upper end? It is depending upon the nature and circumstances of the entity. Now means a complex entity, a large group, a financial institution, complex organizations, large organizations, nature and circumstances of the entity. Circumstances of the entity, uncertainty. Circumstances, change. Circumstances, estimates. Circumstances, management bias. Circumstances, management history of misstatements. The circumstances are the factors we just covered on the preceding slide. So the circumstances are the factors which we have covered in terms of long list of factors which help you determine the important risk. And the nature of the entity is the one like a large organization, complex organization, a large company, a large group of company, a large financial institution, making it complex. And of course, the judgment of the auditor. I think this is very, very important for us as students of AAA. Very, very important, judgment. Because you cannot learn everything. You have a case study in exam. You need to involve in the case study. The special circumstances, the nature of the company, the issues, the problems will be given to you in a case study. You have limited amount of case study, like you have 4 exhibits, 5 exhibits, and you need to extract from those the nature, the circumstances of the entity, and you need to exercise your judgment within those 5 exhibits to conclude which of the inherent risk sits on the upper end of the spectrum. So you need to consider the nature and circumstances of the entity and of course the auditor judgment. So what are the significant risks? The one which sits close to the upper end of the spectrum, the other risk particularly identified by the ISAs, and the last one, what is the significant risk, depends upon the nature and circumstances of the entity, and obviously the auditor's judgment. So this is how you should be looking at what is a significant risk. I'm just putting it here. Sits close to the upper end of the spectrum. How you decide the risk which sits at the upper end of the spectrum, either by looking at the nature and circumstances of the entity or by your judgment. Circumstances have already been covered above. The circumstances means the factors which are given on the preceding slide, right? The circumstances are basically the factors covered above, covered above. So don't get confused with circumstances of the entity, right? The nature of the entity is the size and the complexity of the business, right? That's more easy for you to pick up. A listed company, a large financial institution, something like that. And at the end of the day, the judgment of the auditor and more particular risk identified by the other ISA. So that is a significant risk. Now, look at your exam paper, how things will be in the exam paper, because that is the major part which I need to cover with AAA students. Inherent risk, control risk, detection risk. The only significant changes which have come in is in inherent risk. So you should know the spectrum of risk, you should know the significant risk, you should know the factors which help you determine the more important inherent risk. And that is the change, right? Rest is all the same. Now, how will this impact on your question number one? Let's find the answer. How will the changes in inherent risk impact the question one of the AAA paper? Now, if I look at it and I try to analyze it as a tutor associated with this paper since long now, so I believe the changes in the inherent risk impacting your question number one. We know that the question number one is set at planning stage, no doubt about that. And that's where the syllabus area D comes in. Syllabus area D becomes important. And the change, the revision in ISA 315 is the one coming from the syllabus area D. So the ISA 315 revised and the new article will impact the question number one definitely. Now, will it impact September exams or December exams or onwards? That's not sure because I'm not the examiner, but definitely things will start to change. Now, the new article will impact the question of one definitely. Now, we know in the first question, one, examiner might ask you definition of spectrum of inherent risk. Examiner might ask you definition of significant risk. Examiner might ask you the factors which help auditor in evaluating the risk at upper spectrum, at the upper end of the spectrum, upper end of spectrum. So examiner might ask you those factors even. So this is the knowledge part. But please ensure you're also reading the other part of the articles. I didn't cover detection risk because there's no change. You should know that. Control is an area which is more confined to the AA paper, but you should go through reading the control side as well. You never know, examiner might ask you something from control. But again, that's more logical part of the AA syllabus. Now, apart from this, when you look at the question number one, the critical question, the question set for audit risk or risk of material misstatement. The question set for audit risk and risk of material misstatement is very usual part of question number one. And how will this change? Now, for example, we know that in the prior papers, the examiner asks you, if you look at the old papers prior to this new article, if you look at the papers to date, the papers to date ask you evaluate the audit risk, or they ask you evaluate the risk of material misstatement. That's how they ask you, right? Simple. Now, the papers in future might start to ask you, in the context of change, evaluate the significant audit risk, something like that. They change the terminology. They ask you to evaluate the significant risk, evaluate the significant audit risk, or evaluate the significant risk of material misstatement. So the terminology can be used more regularly now. just to make you realize that this is the revision in the ISA 315, examiner might ask you to evaluate the significant audit risk or the significant risk of material misstatement. Or the papers in future might ask you evaluate the audit, evaluate the audit risk or evaluate the risk of material misstatements at the upper end of the spectrum, something like that. Or they might ask you, evaluate the audit risk and conclude on the ones, and conclude on the inherent risk, identified. Evaluate the audit risk and conclude on the risk which sits on the upper end of the inherent risk spectrum. Something like that, right? Examiner might bring changes accordingly. An examiner might use the terminology spectrum, upper end of the spectrum, close to the upper end of the spectrum, significant audit risk. That is how the question might formulate and change in future context. Now, what does that mean for you? Now, as a student, you should understand this very carefully. If the examiner asks you spectrum of risk, significant risk, the one at the upper end of the spectrum, how would you go about? See, be relaxed. There's nothing big you need to do. As a student, you read the case in order, right? As you do always. Read the case in order when you are evaluating the risk, right? When evaluating risk, read the case in order. That's from exhibit 1, 2, 3, 4, 5 in your planning time. Read the case in order. Now, when you're reading the case in order, you might come across several risks which you will annotate while you are reading. So read the case. Whenever a risk is identified, annotate it. So you just annotate that risk or put the risk on the scratch pad. Put the risk on the scratch pad for your rough working. Whenever a risk is identified, annotate it or put it on the scratch pad. Now, 1, 2, 3, 4, 5, 6, 7. Now, some of the risk which you will be finding and annotating, some of those will be like estimates. Some of them will be around a change of accounting policy, and you will start to realize, oh, this is what we read in the article, that they are the more important ones, the ones involving estimates, the one involving a change of accounting policy, the one with the risk of management bias. So you will be finding a lot of risk when you're putting them on a scratch pad. So when you put on the risk on the scratch pad, in the bracket, you can say bracket estimate, bracket management bias. So you will start to realize, oh, when I start to write them, I will be writing the ones which are more important first. So suppose you found 10 risks, you need to write 7 for your answer. And out of the 10 risks, some of them are more important. How would you realize some of them are more important? Because when you are putting them on a scratch pad, in front of them in the bracket, you will say, oh, this is an estimate. Bracket, oh, this is a management bias. So, and some of the risks will have nothing in the bracket. So automatically you can filter them out and say, oh, these are the one important because they are the one in terms of the factors given in ISA 315. Secondly, whenever a risk is identified, annotated, some of the risk might relate with estimates, change of accounting policy, or a management bias. And some of the risk will be important because of the numbers given with them. Numbers given within the, value given with the risk situation. Example, $10 million, or example, $30 million. And you know, whenever a value is given to you in a given risk situation, you divide the value with either the revenue or the profit or with the total asset, depending whether it is a balance sheet item or an income statement item, and you find materiality. So when you find a value, the very next thing you need to do is you need to find the materiality, because that will really help you also to find the risk which sits at the upper end of the spectrum in exam paper. Because we know in exam, we are exercising judgment in a question on risk on the basis of what is material. So that will still remain valid. You will find the materiality and you will put the percentage of materiality on a scratch pad. So suppose you find a risk while you were reading, there was a value, and you immediately take out your calculator and you find what is the percentage of materiality here. And when you put it on the scratch pad, you say 5% of the total assets or 7% of the profit before tax, and you find the materiality. So value given with the risk example, whatever, and you find the materiality, because that materiality will also help you scale down the more important one. Now try to understand something important here. If it is a listed company, and normally we do get listed companies in question number 1, the materiality found on profit before tax. Now, some of the issues given in the exam paper will have materialities which is relatable to profit. Now, some are the balance sheet items, right? Some are the income statement items. Some items impact your profit. So materiality found on the profit before tax is more important if it is a listed company, because you have shareholders, more important for shareholders. So you need to prioritize those risks as more important, the one which are higher on the scale of profit. Suppose 10% of the profit, 20% of the profit, 15% of the profit. And so you need to scale down. Oh, the 20% of the profit is a more important risk. Then second is a 15%. The third is a 10%. So you find the percentages of materiality, like you find 7% of materiality, and automatically you can see, oh, which one is the highest on your scratch pad. And you can choose, oh, this is the one I need to write first. So I hope when you're reading a case in an orderly format, you will be identifying the risk and you will be annotating them. But simultaneously, when you put them on a scratch pad, you can put in the bracket, this is an estimate, this is management bias, this is a particular risk identified by ISA 240, like a revenue recognition. You can find a risk, oh, this has a materiality. You can put the materiality percentages. Now, after you've done all that and you look at your scratch pad, you can filter them. You can prioritize them, which to write first. Now in exam, you can start to write the first with materialities as a student. So write the ones with higher materialities first. Write the one with higher materialities first, then write the ones with which don't have materiality but are important because they consist of factors. They consist of factors identified by ISA 315. So we know that not every risk given by the examiner has a value. So you can first identify the ones with values, and the one which are very significant in values and very significant in materialities. You can write them down first, like 3, 4. Then you come down to the ones which don't have values, but you think they are the one because they have the factors identified by ISA 315 revised, and they need to be considered as important. Like you might have a risk of management bias but doesn't have a value. You might have a risk where there is a change, where there is a personnel with weak financial reporting knowledge, but there is no value associated with it. Or there might be a change in accounting policy, but there is no value associated with it. Still needs to be considered as an important risk. So I think the extra step you might need to do if the examiner use a terminology significant risk, or the examiner use a terminology upper end of the spectrum, then what you used to do prior will continue in the future with the exception of an extra step. Now, when you're putting things on a scratch pad, you need to remember which of the risk put on the scratch pad are the one more important. So if you put like 20 risk on the scratch pad, now you need to realize which 10 will you write. I think that is an extra decision you need to take now. If the examiner used the terminology significant risk, spectrum of risk, or something like that. So the only change when you were doing past papers before and now is that you find the risk and then take a decision which to write first. So I think the priority, the decision making, the judgment, which to write first will play a crucial part. Now, every student will have a different exercise of judgment. There is no hard and fast rules here. You cannot say which of the one we should write first. No, either you start with the ones with higher materialities first, followed by the others which don't have materiality but are still important factors which help determine the inherent risk at the upper spectrum, or the one which are identified by the particular ISAs coming later. So it's totally up to you. So you have to exercise a judgment, right? At the end of the day in the exam hall by looking at the case study. So that's what you need to do in. So be watchful of the new terminologies. If those are used, how would you assure that you are writing the answer in the same way? The way you write the answer will not change. The way you paragraph your answer will not change. It's only about prioritizing the risk identified from the case study into writing the first, the more important one, later the least important one. You're not making a spectrum. You're not making the chart likelihood impact. You're not making columns likelihood and impact. You're not even using terminologies likelihood and impact in the exam paper. It's just about prioritizing the risk, as simple as that. So this is the analysis of the critical part of the article, which I believe as a AAA student you should be sound at. And this is what I tried covering in my presentation. So just one quick recap. This was a new article, lots of things in it. You need to read it out as a whole. There are a couple of paragraphs for the AA students, just ignore them out, particularly the one around control. Once you read the article in full, this is the critical part for a AAA student. What is the spectrum of inherent risk? Be sure you know this. Next, you should know how you judge where an inherent risk sits on the spectrum. And number 3, you should be knowing what is a significant inherent risk. So these are the 3 critical areas which should be addressed in a very, very effective manner. Now, I'm Kashif Kamran signing off from this technical article update, risk and understanding the entity for all students appearing in exams in September 21 and onwards. I hope this session will be of benefit to you. If you have any queries, you want to ask anything from me, you can just drop a comment on my YouTube channel or on my Facebook or on my WhatsApp or anywhere possible if you are connected with me on the social media. That is it. Wish you all success. This is your tutor Kashif Kamran signing off from the technical article update, risk and understanding the entity. Have a good day. Take care. Allah Hafiz and goodbye.